China's consumption data also came out this morning. Consumer spending growth unexpectedly slowed in April as retail sales only rose by 2.3% in April from the from a year ago period, which was less than a 3.8% forecast analysts had predicted and slower than the 3.1 pace reported in March of this year. However, industrial production that accelerated sharply by 6.7% in April from a year ago period, and beat the expectations of a 5.5% growth. That was also a marked pickup from the 4.5% growth we saw in March. I think even though the consumer sentiment over there in China remains weak, and but we are seeing a pickup in the factory activity. I mean, a 6.7% growth does give you some signs of indication that the economy overall is on a mend, although the recovery is lopsided because industrial output is growing up, whereas consumer sentiment is not improving by much. And overall, if we look at it, this could mean some bit of short-term correction for Indian markets as well, because it is a sentimental play over there. Remember, Chinese markets are much cheaper than Indian markets. They are trading at a PE of about 9 to 9.5, whereas currently at these levels we are at a PE of over 25. So that could perhaps lead to some short term FII outflow, foreign institutional outflow. And as we know, in May, I mean, the selling by FIIs has been rather strong. They have pulled out over $3 billion dollars worth of equities from Indian markets, and that is the highest monthly selling if you compare it with the overall selling in the month in FY24, where it's just 2 or 3,000 crore rupees more. So that could perhaps lead to some bit of pain more from a FII perspective.